Good morning, guys. This is Ray from nextforextrade.com. Today is Friday, the 16th of August 2019. It's 5 to 8 UK time. So let's kick off. Let's kick off and have a look at what we've got going on in the market. So you can see here I've got two positions open, or three positions in total, but on two separate pairs, AUD USD and the Euro USD. So these have been going for a couple of days. So these, how are we going to start with this? Okay, let's have a look at AUD USD first of all. What I'll do, I'll go over these two. I'll go over also the entire market, tell you what I'm seeing. I don't take additional trades normally on a Friday, but in case you do, I will just go over and see what I'm seeing in the market. So this first of all is the AUD USD trade that we have on. This here is currently I'm still happy with this position. There's nothing wrong with this. You can see I've scaled into this two positions identified by these two green lines here, and that's as far as it zooms. My stop loss is above this area here. So the premise for this trade was this entire pair is quite bearish overall. So we've got, clear lower lows, lower highs. What I was looking at here was this extension that we saw here. So it wasn't really in the grand scheme of things like a lower high that I was seeing in terms of this move, because that would have more context on the weekly, but on the daily, this hadn't really fulfilled a full cycle, if you like. When I say cycle, I mean that it extends and pulls back and then extends and pulls back. In this, we've only got really kind of two lower highs and one low, so it's not a full trend, but I felt that there was enough context here for me to take this position. So although it's just this extension and pullback on the daily, it did have a lot more context on the 4-hourly as well. I'm just going to see what that. Well, this is interesting. I didn't put this on before, but you can see if you do use Fibonacci in your trading, this it's just fallen shy of a 38.2 retrace. So in fact, let's have a look at this on the 4-hourly, because it's going to be a bit more context. So it's just fallen short of 38.2. It says 61.8, but it's the same thing. I'll just reverse it. One sec. It's the same but different. But just so it's easier to read off for anyone who's not familiar with it. So we had that context on the daily of it being an extension and it being a bearish move. So on the 4-hourly now, what we also got is the price within that same standard deviation channel in this overbought area, giving us some indication that it could move away and move lower again. We had this interaction with this resistance, so it kind of came around, double topped, kind of. It just pulled away. I mean, there's previous support areas as well that we can see that this price had trouble moving much higher than. So I'm happy to have my stop losses above this level. It's an area where there's a clear indication that I'd be wrong on this trade if that were to happen. It's outside of our standard deviation channel. It's above our previous resistance as well. So should that get stopped out, it gets stopped out, c'est la vie. But I'm going for a profit target. Currently, we can see this is a level that my initial take profit is on. And there's another take profit down here. And those aren't just arbitrary levels. I think I'm going to do a separate video on profit targets. But I'm not just arbitrarily picking those levels. There is a reason for me choosing those, and they ensure at least a 1-to-1 reward to risk. So overall, the risk on this is 2%. But if this comes to fruition, the payoff should be it should be around 3-1, possibly 4-1. I'm reading the lower time price action to guide this, so that's why it's not a definitive yet. It's going to be this or that in terms of a take profit. I'm using these lower time frames here to help guide my exit. But we need a few things to happen. It is just gone into the 8 o'clock, so it's the UK Open. So we're in the European session. So if this hits take profit, we've got it being a Friday. I'd like to see this start to move into profit within, by US session, late US session. There may be an instance where I close this out before end of market. It depends. I'm just looking at these lower time frames now to guide my decision. So as I said, I think yesterday, basically it's a case of the price telling me what to do. So I'm not enforcing my desires on the market and what I want the market to do. There's definitely something that I envisage that I want the price action to do, and if it does that, then I continue to manage the profit. But if it doesn't, then I just manage the position accordingly. So as this goes, I could be stopped out in today's session. It is hitting, just looking at these lower time frames as well. It could go either way, but what's good at the moment is this is the hourly, by the way. This is encountering some resistance here. Previous levels, it's kind of zonal as well. And just imagine what we were seeing on the 4 hourly. There's that line that comes across down there, right? So basically beyond these highs is a bit more of a danger zone because it's approaching this previous resistance here. But as long as it stays below these types of levels, it's still within the context of what we were looking at on the 4 hourly here, right? This upper edge here. But if it breaks that, then I may consider moving my take profits to break even. It is just a wait and see. So I'm gonna have to wait for this to give me a bit more information to trade off. So that's the Aussie. Let's just have a look at the other one, the Euro USD, which is the other one we've got in the market. So this is coming on nicely. So this this was my entry. So if we look at the daily, lower highs, lower lows, standard deviation around the price had interacted with our upper edge here. Notice that there was a lot of resistance around this level. It had broken the support area that we'll see on the lower time frames in a sec, which basically was the premise for my entry. I've got my stop not quite above the previous lower high, but still in a sensible enough position where it's above the kind of danger resistance zone, and it's also outside of our standard deviation channel as well. So there's good placement on the stop. The profit target is on a 1-to-1 basis. To be honest, it's probably a bit more in this beyond that 1-to-1, but it being a Friday, I prefer to have my positions closed out over the weekend rather than to leave them open. So this is another one where I'm just really waiting on the price action to tell me what to do. If I look at the hourly, you can see here, let's just tidy this up a bit, one moment, get rid of all of those. Always like to have my charts as clean as possible. You'll see I don't use any indicators. The only indicator I use is on the daily here, which is the ATR, but other than that, it's just price action that I'm using. So if things get too cluttered, I just remove it. Just helps me think clearer if there's not too many distractions on there. So on the hourly, we can see we've got some nice price action to the downside. It's producing these lower highs, lower lows. It's nicely within our standard deviation channel. It's come up. It's interacting with our average on the standard deviation channel. So it's finding resistance off of that. I mean, there is a good chance that it could come move a bit higher in the sessions before, you know, moving lower to interact with the upper edge of our standard deviation. And I mean, it would still be below my my entry, but obviously there's a likelihood of giving some money back if that were to happen and not fall away again. But I'm comfortable with this position. There are a few ways that I could manage this. I mean, given that the way the price has moved now, what I could do is move my take profit down and use a protective stop above this level, like this. So here you can see I've used the price action to guide my decision, because we've got this, these are lower highs, and this is a lower high in terms of this bearish move here, right? So if the price starts to take out these previous lower highs and start to make higher highs, then I've protected the capital there. That would ensure me, at the moment, basically the way this is set up is I could basically profit £28, or I could profit £100. So it's you know, providing nothing catastrophic happens in the market so that it jumps over that level, then I'm assured a profit either way that the market goes. But for a few reasons, what I'm going to do, I'm still going to give this a bit more breathing room, because I'm going to put this back up to, what was it, 100 here, because this is the placement of this above this lower high isn't ideal. It's still protecting profits, but basically you can see how it's hit the upper edge of our standard deviation previously in these moves, and there's a good chance that it could come and interact with this level here and then fall away to take this to hit this take profit. And looking at the daily, there looks like there's scope for it to move at least to those levels based on this bigger move. So I could be just, you know, too conservative taking profits there, which is why I'm reluctant at the moment. Well, I'm not. I won't. It's not part of my plan to have my stop loss here at the moment. I still want it to give it breathing room, because really the danger area is if the price takes out these previous lower highs for now. But again, this is just how I use price action really to help determine how to exit the trade. So at the moment, what I'm anticipating is in the next few hours, going into, you know, deep into the European session, perhaps into US session, is it will see the price fall lower and come at least close to my take profit. If, for example, I see the price extend and I start to see reversal signs off of my lower standard deviation channel, and it's only a few pips away from my exit, I'm more than likely to just take that money, because take that profit off the table, because again, I'm just thinking, right, it's the weekend coming up, the market's going to be closed over the weekend, don't want to open positions for the sake of a few quid. It's just making that executive decision to, you know, I'm always thinking, it sounds really negative, but I'm always thinking what my premise for the trade is, what could go wrong. And that's the best way to kind of protect the capital. If you look at how I set up any of these trades, the starting point isn't, all right, how much money can we make out of this? The starting point is, okay, where's my stop loss going to be? Where's the point that I'm wrong on what I'm anticipating the price action to do? And then from setting my stop loss, then I extrapolate, right, what's the profit out of this? What's the profit potential? And that is I mean, for me, it's a good starting point, and certainly one way of trading that has helped me a lot. So the clients that I've taught in the past as well, they found that useful as well. So you may find it useful too. Just think of protecting your capital first of all. What can go wrong? What have I got to lose here? And just making sure that you've got an upside that is equal to or greater than that risk. Just touching on that briefly, some people may be saying, you're taking out positions sometimes that are less than 1-to-1, or you're the risk is you should be going for 2-to-1s, 3-to-1s. My answer to that is it depends. It depends on expectancy. Like, there's the concept of expectancy. So the trading expectancy is how frequently you are right in the market. So how frequently you make a profit versus how frequently you make a loss, and not only how frequently, how much you make as a profit or a loss. So the reason that I can take positions that are less than 1-to-1 on reward to risk is because of the type of probability on the trades that I take. Because generally the positioning I take is higher probability, it means that I can quite often take profits that are less than 1-to-1. Now when the opportunity arises, then I scale into positions and I add to positions, like I've done in the AUD USD. I mean, obviously that's slightly going off. The trade is negative. It's losing at the moment, but it's still a sound trade based on the price structure that we were looking at. So that's just something to bear in mind. I mean, just don't take anything I say or anyone else says as a guru to heart, because some people say I only go for 3-for-1s, or I'm saying it depends on expectancy that you need to factor in. Test it for yourself. Don't listen to anyone experience it through the market. Spend some face time with the market on a demo account, on a live account, on the software that you can use to run historically the market. Test it, practice, and just develop that skill and gain a kind of intuition around the market from experience, rather than someone just telling you what to do or how to do it. But yeah, that's enough on that. Let's just have a look through the market, and I'll just see what opportunities that might be here. So AUD CAD, and if you're unfamiliar with the process, basically I look at the daily first of all, and I'm looking for signs of the price in a downtrend to be overbought and in a uptrend to be oversold. So here we've got a downtrend. This for me isn't tradable today, but on Monday what I may be looking for is the fact that this has interacted here. You can see these highs, it's hit resistance, especially if today's candle ends like it is today, very toppy type candle, finding resistance off of that. Be looking at the lower time frames to start showing lower lows and lower highs, and potentially shorting as the price moves past the low of the daily candle. But that's not for today. No. Well, this is quite similar to the Aussie USD that I'm in, but this isn't tradable for me. It's not great, and yeah, no. Already in this, discuss that. No. 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 No, it's finding a lot of support there. How significant is that? I think I've done the same thing yesterday. Don't know why I've got that in there. So normally, sometimes I leave lines in like this if it's a really significant level. So if what I was checking to see was whether that support went across. Let's take it back a step, because on the daily I couldn't see any previous areas of support or resistance. It wasn't clear. Even zooming out, there wasn't it wasn't evident. So what I'd done was jump up a time frame to see if this level was a major low, like an all-time low or something like that, because if the price is approaching that level, I just want to know that, because if it breaks it, it's definitely going to be, it's a high likelihood that it's going to be quite a dramatic break as it busts through that level, or as it's kind of doing at the moment, it could be good for a reversal type trade. Can you see how although it's not an all-time low, it's still finding a lot of support here. I mean, it's been 1, 2, 3, 4, 5 days where it's hit a very similar price and failed to break. So looking to the lower time frames for signs of on 5 minute here, what I'd be looking for on these lower time frames is is the boxiness. So it'd be like a very rangy type of trade. A very rangy price action. And that could be, although it's not the strategy that I'm doing here, this is a trend-based strategy that I'm trying to teach in these videos. But you could consider doing fade trades based on that ranginess that you're anticipating. So that's essentially, if you take the hourly as the example, is having your stop loss underneath these levels here, and you can either, there's two ways to do it. You can either identify what you assume is the range. So I mean, I'm seeing here there's some kind of zonal resistance. The price could have trouble getting much higher than. So you look for reversals off of the support, stop loss underneath that support, and get an entry as tight to this level as possible, as tight to the support as possible. So you need a reversal candle on whatever time frame you use, and then that way you're taking profit to before the upper edge of the range. I mean, you can try and trade the breakout as well. So what you'd be doing, if you do it beyond what you're seeing in the range, then what you're saying is that the price is either going to retrace on the daily or it's going to reverse completely. So in terms of probability, the trade where you're doing just the range to before the previous resistance level is more probable. It's a more probable trade, but it's obviously possible that the price could break higher, do a retrace, or do a complete reversal. That's quite possible. So as a way to trade that, my approach to something like that would be have some money and take some money off the table for what's probable, which is just an exit before the resistance. And if you want to, you could do counter trend trading and try and catch the bottom, and that it's going to move up, and have something in for the possible move, which is going to be a retrace or a move much higher. But I digress, because that's not really what I'm trying to teach in these videos. But that's just one way that you can just be aware of what the market's doing and just look out for signs of tradability and build strategies around that. So this here, no, that's not tradable. Euro, already in that. This is very similar to the AUD USD that I'm in, just by the looks of it. It's got that big this is interesting because just getting used to how charts move as well. I mean, obviously there's going to be some correlation, because they both, the AUD USD and the GBP AUD, both cross with the Aussie dollar. But it's more the price action that interests me. You can see there was that spike on this day here, and then the kind of days where it fell away, and there was that resistance that we were seeing on the daily. So if you remember, just memorize what you're seeing on this chart here, and then we switch back to the Aussie USD, and no, hang on, it wasn't the Aussie USD. What was it? It was Euro USD. Yeah, I think, yes, sorry, it's because it was the trade that I was in. It's just a similar, they look similar to me because of this, the way that it spiked out. We had fundamentally a downtrend, and we had it spike out on that day, and then there was a few days there was resistance, right? And that's, so it's the Euro USD and the GBP AUD. Similar type of trades for me anyway, in terms of where I'd be thinking of stop losses. I mean, they'd both be tradable. I'm in one, so I'm not going to be in the other, but it's a similar story. And if you look at enough charts, you'll start to see, you know, similarities, and that helps you because you don't want to be, as I would have spoken about earlier this week, you want to avoid currency correlation or negative correlation or positive correlation, where the price either moves in the same direction or moves in opposite directions. It's not always a case of not trading it, as you would have seen this week in the trades that I took, but it's just being aware of it and the effect that it can have on your trades, the impact it can have on your trades. So we've got the GBP CAD. This actually looks okay. For potential short. It's not great that today's candle started to move up into yesterday's one, but we've still got, I can still see a trade here. I just don't think there's going to be enough time on a Friday for this to do what we need to. So what I'd be looking at, so we've had lower lows, lower highs in this move here. They're not great in terms of the way that they've extended and pulled back, but there's still context. So briefly, you could consider a stop loss above this previous candle, and this resistance isn't great, and yeah, firstly I'd leave this. I'd leave this, but let's just talk about, let's say it was a Monday, and if I was slightly riskier trader, I'd be thinking 0.5% on this type of trade. So my typical range is from 0.5% to, you know, full 2% into a trade. So this is way down there. I'd be, yeah. So stops above this level. Let's put in an alert so you can see it across the time frames. What effectively needs to start happening on these lower time frames is for these lows to start getting taken out. So I'm going to put an alert on here. Right, so the price to start making lower highs and lower lows, and that would go into the story, if you like, the narrative that we're seeing on these higher time frames of the price moving down. So if these previous highs here get taken out and the price starts moving much higher than these, it's not worth it. It's because there's not going to be enough time for the candles to form by the end of day to start it moving down and pull back. So what we need, you know, within the next few hours, if we were to trade this, is to start seeing this price move down, and ideally within our standard deviation channel as well, and look for a reversal off of the upper edge of our standard deviation, or the middle, the average of our standard deviation, but after it's broken this previous higher low. But I don't think that's entirely likely today. No, wouldn't trade that. No. What's all this from an earlier trade this week? Just to clear that up. Yeah, this will be interesting next week. I'll have another look at that. No. Had a reversal off of that. No, I would. Just trying to build see what story the price is telling. So we can structure. I mean, this is another one where I wouldn't really want to go the full, 1%, maybe 0.5%, or even better, just leave it. But what I can see is this reversal off of here. I mean, really, what you want to see for it to be a true reversal candle, it really should be kind of at the end of a either a retrace or an extension, and it's even better if it's encountering some support or resistance, and I'd prefer that to be on the daily. So on the daily, the reason I kind of zoomed out here, because I wanted to see is whether this high that we're seeing, so I'm deeming this as our bearish move, and I'm deeming this as kind of an extension and this a potential reversal. So I was looking at this high on this yesterday's candle to see if there's any previous support or resistance that went back. I mean, there's some kind of zonal, I mean, look, there's this level here, but it's not great because this is the bigger move overall, right, on the daily, and it's riskier because it's reversing off of the average, the center here, rather than the upper edge. If this had been the upper edge, I'd be less hesitant. So this is a bit trickier to read. But what I did notice is this move here has a context on the 4-hourly. Right, so although this is just like an extension on daily, there's going to be lower lows and lower highs on the 4-hourly. So when we switch to that, we can see there's a bit more of a story to that. And it means as well, when we look on the 4-hourly, there's more that resistance I was talking about from this previous, what is just a single candle on the daily, is several on the 4-hourly. It's a stronger area of resistance. So the reference point is a stop loss above this level. Let's put on an alert so we can see it on all time frames. Above this level here, so outside of this resistance, and also outside of our standard deviation on the 4-hourly. So started to see some signs of reversal on the hourly, because it's started to take out this previous higher low. Let's just see how that goes in the standard deviation, and it's started to break the support of the standard deviation as well in this candle. You see, and that's also broken horizontal support as well. So it's finding support off of here, and it's just broken through that. So those are things that can help consider shorting. So the way I would play this, and it would probably be a quicker return as well in terms of money, because of how this would be, the time frames that are playing it off of. I'd wait for the price to come back and interact on the 15-minute with the upper edge of our standard deviation. So it's 8:30 now, so that might be within the next 2-3 hours. So wait for reversals off of the upper edge of here and have a stop loss above this previous high here. Come on. So this high here, or this high here, that's a conservative trade, because it's also, and it makes sense as well, because if you look, it is the price would have moved on, so it'd also be outside of our standard deviation channel. It's this same area of resistance I've got here. So it stacks up like that, or you could go for a much more aggressive trade. And sorry, based on this stop above these highs here, a 1-to-1, because that's reward to risk. Obviously don't know where the entry would be, so I can't really figure out where the stop would be. Let's just say, for example, it's around about here. So that would be 30 pips. It would mean a take profit would be about here. See how the fib extends on that. Yeah. So yeah, there's two ways you could trade this. Firstly, the first criterion you need is the price to, on the 15-minute, come up, find resistance off of our standard deviation at the top, see a reversal candle, and the price then move past the low of that reversal candle. If that were to happen, there's two options that you could have on the entry. There's two options you could have on the stop loss. You could have it above these previous highs here, as I've indicated, which is a more sensible approach in my opinion, because you've got it outside of a standard deviation on multiple time frames and above resistance on multiple time frames. But that also means you need the price to move a lot further down in order to reach your take profit level. I mean, looking at the daily, that looks achievable, because even on a 1-to-1 with an entry, you know, roughly where I put it, it would still mean that you're taking profits before this average here, or before it gets oversold on the standard deviation at these lower levels here. So that makes sense. You could, if you wanted to be more aggressive in the trade, take your entry, your stop loss above these previous lower highs, which would obviously mean that to reach your 1-to-1 reward to risk, the price would not need to move as far. It's going to be a much closer take profit, something like that. Let's say, for example, depends on where the entry is, but let's say that, for example, it would just mean you've got a bigger position size, so that each pip that the price moves lower, you're making more per pip. Whereas when it's up here, it's a smaller position size. It's the same amount you're risking, but you've just got more insurance, if you like, that the price, that the stop is outside of that resistance. But here, it still makes sense in terms of the price action, but it's really only making sense on one time frame, which is why I say it's aggressive, because a stop here would mean here would be still inside of this standard deviation channel. So you could be right overall in this direction, that it eventually falls away and moves lower, but you're wrong, because you got stopped out with too tight a stop. So you're just out the market too early and didn't give the price enough breathing room. So yeah, that would, if I were to trade today, this would probably be one that I would keep my eye on over the next few hours, just to see if there's resistance, and a stop above this level here with a 1-to-1. As well, I would also check what the swap is on this as well, because I mean, there's a good likelihood that you maybe just stuck with it over the weekend and you're paying a swap. So the swap on this is $1.50 that needs to be paid. So it is one that you need to bear in mind. There are carry costs involved in this, and this would be a tricky one. You know, I wouldn't risk more than 0.5% on this if I were to trade it. Swaps as well. Look, that's another thing to bear in mind. Another reason I'm quite comfortable with the Aussie and the Euro as well, to hold them overnight, is because they pay on the swaps. It's not it's not a massive amount, but that's something to bear in mind if you are taking, say, positions over based on weekly or even monthly time frames. You definitely need to consider what your carry costs are going to be, because if you're carrying a trade from one day into the next, you're either charged a swap or you receive it, so you're paid it. So if it's a long, if you're in it for a massive long haul, if you're having to pay out swaps, then that can have a massive impact on your profitability, especially if the interest rates of the two currencies that make up the pair are massively wide apart. It can just mess you over. So pay attention to those. So NZD JPY, no, wouldn't trade that. No. Looks like it's hitting resistance. No, that's another potential fade trade if you do that. No. Next. No. Okay. Bitcoin. No. Okay, that's it. Yeah, that's it for today. Hopefully it's been useful. Wow, that's been a long session today. All right, need to cut these down a bit. If there's any feedback you've got on the sessions, any questions you have, be great to hear from you. If you like what you're hearing in terms of these videos, and I'm going to be answering comments, so leave comments. I'm trying to grow the channel, so do subscribe. I really appreciate that, and yeah, I will see you in the next video, which will be Monday. Take care. Bye.